The yen is trading up right now versus major currencies 24 hours after Japan's first intervention since 2004. Some strategists say it's really unclear whether the Japanese government is trying to promote a weaker yen or just prevent it from rising. With a little bit more on trade right now, we bring in Vassili Serebriakov. He is a currency strategist at Wells Fargo. He is a Bloomberg best for overall currency forecaster. Vassili, thanks so much for joining us today. What do you make of the yen moving higher? Is the market testing the Bank of Japan's resolve?
I think there are to an extent. I think it's understandable that there's a certain degree of skepticism in the market about the Bank of Japan's ability to really reverse yen strength. If we go back to 2003, 2004, the last period of intervention, they spent around 35 trillion yen with fairly limited success. So I think it's understandable.
It's also clear that the U.S. and Europe don't really want to participate in this round. Do you think the Bank of Japan is trying to promote this weaker yen or just keep it from rising?
Well, I think they're drawing the line in the sand, if you want, at this point. I think it really remains to be seen how committed they are, how much they're prepared to spend, and how protracted this period of intervention is. I think should it really become a successful effort or a long-term effort, I think some of Japan's trading partners would probably become a little bit less comfortable.
See, you mentioned a line in the sand. I mean, there's a lot of people in the market who say it was such a mistake to mention that level of 82, because now there's no choice but for the market to push to that point. I've even seen some people saying, look, this could break 79 somewhere. Do you think that's likely?
Again,
it's an extreme view, but
again, I think the bias I would still think is for yen strength at the moment. Certainly, they can limit that strength, but I think as long as the fundamentals don't change, and as long as the main driver of yen strength, and it is really, in our view, the weakness of the U.S. economy remains, I think that traders will push it higher.
I want to look at this story from an Asian angle, if we can. Do you see the intervention as a shot across the bow to China in any way?
Well, I don't think it's the main motivation, but I think it's not surprising that people will put the two factors together. Not just China. When we look at that region more broadly, Japan is really surrounded by central banks that tend to be more interventionist. They don't typically like to see their currencies appreciating too much. So I think this could be viewed in the broader regional context as well.
So you're not paranoid on the part of the Japanese thinking that China wants a weaker yen?
I don't think, again, China's motivation was weaker yen primarily when it was buying. China's motivation was stronger yen when it was buying the Japanese government bonds. But I think, should intervention continue in Japan and should be successful, which is a bit of a paradox, I think regional central banks will be a little bit less comfortable in allowing their own currencies to appreciate.
Vassili, thanks so much for joining us. He is a Bloomberg best overall currency strategist for Wells Fargo.